Trading involves risk of loss and may not be suitable for you. Past performance is no guarantee or reliable indication of future results. All advice and education content is general in nature.
Good morning, traders and investors. It's Wednesday, the 26th of September, and the selling activity we'd been waiting for in the US markets has finally arrived. We had a pullback last night in the US markets for Tuesday's trading, and Europe, whilst it was still showing some positive signs, was down for the majority of the session before a rally through the afternoon. As we take a look at the leading European indices, the FTSE index was up 20 points, closing at 5859. That's 0.36% higher. Whilst this candle here shows a little red candle, it was slightly upwards, and that's just a slight movement in this counter trend retracement that's persisted for the last 2 weeks. Now, with the US markets down overnight, we're quite likely to see the European markets fall heavily tonight. So we're looking forward to a little bit more selling pressure there. A very similar story to what we'd seen through August, and we could expect a bit more of a retracement back down towards these lows down around 5,750, possibly even 5,700. The German DAX was a similar story. It was up 12 points, or 0.16%, closing at 7,425, while the French CAC 40 was up 16 points, or 0.4%, closing at 3,513. So a bit of selling momentum starting to creep into the markets, as we can see with the Dow Jones. It had closed down 101 points, or 0.7%, at 13,457. So as the short-term sideways movement has persisted for the last 2 weeks, we've finally found some selling pressure. It is still a counter-trend movement against the overall upwards trend, but there's a reasonable probability now that this could pull back to 13,300. And if there's even further selling pressure, maybe even a little further lower than that, down towards this blue line here, which is our 50-period moving average. The Nasdaq index had lost 43 points, or 1.3%, closing at 3,117. A strong solid red candle there, forming what's called a bearish engulfing pattern. Again, this is a counter trend movement against the overall upwards trend. And the S&P 500 index had lost 15 points, or 1%, closing at 1,441, showing a very similar pattern to the Nasdaq. Volatility had increased quite sharply overnight, and that's a good positive sign there for those who are bearish. It means that there's a lot of fund managers out there that are fearful that the markets could retrace a little further, and that's driven the VIX index up. It's closed at $19.50, which is a 54-cent gain from the previous session. We can see the strong amount of volume that's been going in at the bottom of the markets here, and our stochastic, which is a momentum indicator, is now showing a switch from the bears to the bulls. The ASX 200 was down 16 points, closing at 4,369. That preceded the US market activity. It is still within its short-term retracement here. It's coming back down towards its short-term moving average, which is the 20-period moving average. The momentum of the overall trend appears to be slowing. We have a bearish signal on the stochastic as well. The ASX 200 SPY futures are actually showing a downwards move of 35 points before the market open, and that will have a major influence on the ASX 200 as well. That could actually see it down at the 20-period moving average, breaking that short-term trending movement. Quite similar to what we had seen back here in late August, early September. The real question will be then whether it can hold these lows that are down around 4,280, which is the previous low point, previous 2 low points actually. And if there is a break of that, then we will be looking for a change of trend overall. Well, that is our summary for Wednesday the 26th of September. Wish you all the best in trading, and look forward to giving you an update again tomorrow.